Testing, mic test. So guys, I'm just currently testing the microphone. If you guys are live and can hear me, could you type something in the comment section? Both on YouTube as well as TradingView. Hello, mic test. Hello, almost gold. So I'm trying again. Can you tell if this time it is audible or what? Also, is the audio level good, less, high? Any comment on that? Okay. So in that case, let's just start off. If other people are going to join in, they can join in later on. Okay, thank you for the feedback. So, yeah. So let's start off this webinar. This is the second in the series of these trading opportunities weekday webinars that I have started. My name is Neerav, and before I give any further introduction, let's first get done with the formalities. As you can see over here on the screen, here the disclaimer suggesting all content presented here are purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading, investing, or any other activity, then you yourselves will be liable for your profit loss of profit, emotional, monetary related, etc. etc. You can read the rest by pausing the video if you are watching it as a recording. So now that we are done with the formalities, let me give you a quick introduction. My name is Nirav and I'm the founder of 50eyes.com, which is a website, and 50 Eyes Market Analysis YouTube channel, which is my YouTube channel, of course, where I present my views based on Elliott Wave, which is my area of expertise. Elliott Wave is a form of advanced price action, and I have been practicing it for 7-8 years, about, or probably more. And to give you the highlight of my work so far, I have an extraordinary leading the industry forecast record of 6+ years, where my forecast has remained greater than 80%. What basically I'm saying is that whatever analysis I have done in the public domain so far is being written down here in these sheets, in these Google Sheets. And you can see the accuracy of the forecast I have done has remained 2016 83.34%, 2017 87.5, 2018 84.61%, 2019 84.88%, 2020 88.52%, and 2021 is 82.88%. So this is a staggering 6-year record of 80% plus accuracy, which is, if I'm not boasting about myself, is the highest in the industry I have seen myself personally. If you have a link to somebody who has a public record which is higher than that, I would be definitely glad to check that out. So that's about my work, my quick introduction. And as I mentioned, my area of expertise is Elliott Wave. What we will be doing in this webinar is we will be having a look at multiple markets with Elliott Wave, right? So what that basically means is we will be having discussions on Euro USD, right, EURJPY, etc., other different charts, and I'll be trying to formulate trading strategies for these markets based on Elliott Wave. We will also check out what we said in the last webinar and what worked or what did not work. Is it a book recommended over 10 years? An excellent book. I wouldn't comment on that, Almost Gold, because I have not gone through that. And from what I have understood so far, it does not really cover Elliott Wave. He has done his own studies on top of it, and he has some very complex rules which sort of deviate from the main line of thinking of Elliott Wave. Hi, Ganpati. Hello. Hello there on YouTube. And as I've said many times, if my track record is not good enough, then what's the point of learning technical analysis, right? I have 6 years plus record of 80% accuracy using what I do, which is Elliott Wave. So I'm not sure why somebody would be interested in learning something other. Does the guy you are recommending here in the comment section has a record public? If yes, then definitely you should look into it and pursue learning it. Get my point? As I said last time, learn what works and what has a proven track record. Anyways, getting back to our discussion. So last time we started our discussion with Euro US dollar. So let's do the same thing again. Let's start with Euro US dollar, and this is not the chart I'm following. Yeah, that's the one. West Japanese yen. Yeah, that's the chart we are following. By the way, I forgot to mention I am the author of a book, Think with the Market, Secrets to Achieve 80% plus accuracy with the Elliott Wave. Because we were talking about books. I just recall that. So, Euro USD, let's first quickly have a look at what was discussed in the last webinar, right? So the last webinar, let me just open that up in the separate tab and visit on. Last webinar, EURUSD starts at 726. So this is our discussion done in the last webinar. Let me quickly turn on the settings to 1080p. For whatever reason, YouTube always sort of is reloading. Anyways, so in the last webinar, as you can see, I have a level marked here at 1.04500, which I remember very clearly I suggested as a possible reversal level because this was expected level for the completion of wave 4, as you can see over here written, right? So this was 38.2 retracement. I'll talk more about it in detail in a little bit when we actually go to the actual charts. But for now, just remember that this was a suggested level of reversal, right? And the view was that the market can completely reverse from here, right? Or if not completely, then it is expected to at least give a short-term reversal. And there was also a short-term setup, right? And the short-term setup was that the market can go a little bit up. Is my stream still working or what's going on here? It's showing stream offline in the incognito tab I have. Can anybody confirm here? Is the stream still live? Okay, so thank you for the feedback. So continuing on, this is the noted level and the setups were two. The first setup was wait for the market to reach this level and possible reversal. And second setup was a short-term long setup for the market to reach till 1.04500. So now let's head on to the actual chart and see, right? Yeah, actually, I think I posted this as an idea as well, maybe. Yeah, there it is. So this is the short-term long setup which I posted, and the idea was that we can see the market to go towards that 1.045 level. If I click over here, you can see that the chart will load up, and it actually did go to 1.045 level, and it actually did form a reversal here. So this was a setup that played out picture perfectly, and as a matter of fact, I was also long here. And I booked my profits a little bit before the marked level somewhere here. I think I booked my profits. So that was it for the last analysis, which played out perfectly. Would like to see your reactions in the comment sections. And moving on, now let's have a look at the actual chart. There is a comment here. So I'll address that later on. So anyways, what my point was that we are going to now look at the current levels, and the current levels, first let me mark this last level as well. Okay. Oh. We are using different data feed, I guess. Okay, guys. So in the current chart, what we have is a WXY formation, right? And that's WXY formation we discussed in the last webinar as well. But for the sake of people who were not present in that webinar, let's just discuss it a little bit again. So a WXY corrective formation would look something like this on the chart, right? W up, X down, and then Y up. So the first leg is called a W, the correction is called an X, and the next leg up is called a Y. So as we discussed last time, we have the W over here, right? X is either here or here. Two possibilities were there, right? And the Y is Y was what we were expecting to complete around this 38.2 level, which was marked, right? somewhere over here, right? So that was our analysis in the last webinar. Now, what has happened afterwards is that we have seen a retracement, what do you call it, correction after the 38.2 level was touched. However, the price action after this level was touched is not really in what do you call accordance with what we would expect from a strong down leg, right? So what I am seeing over here on the 15-minute chart, let's move, although it was quite clear on the 1 hour as well, or clear enough. But on the 15-minute chart, I'd see a lot of choppiness and a lot of corrective three-wave kind of movement, right? So if I were to label it, I would have gone with an ABC, ABC, and then ABC. And this again looks like some sort of ABC. So you get the idea. This is a lot of sideways movement. Three waves down, three waves up, three waves down here, three waves up here, three waves down again, and three waves up again. So this is not in alignment with our expectation that this market will give a huge down move from here, right? So what this really is suggesting is that after this wave was complete, maybe there is going to be another connecting wave X and then another Z, which is another move in the upward direction. So this possibility is coming to my mind right now, and this possibility is something we cannot relegate at this point in time. So given that, again, I'll just quickly like to point out that the X can also complete somewhere here and then go up, or it can just go sideways, give a down leg and then go up. So the possible positions of X are many. So what you will have to keep in mind is that maybe this market will remain either sideways or maybe break the range for once and then go up. So that's how you need to keep this in mind, right? So that's my take on Euro USD. Currently, it is possible that it might fall, but it is unconfirmed at this point in time if it's going to form for an X wave and then go up or what, right? So the setup I have in place right now is a very simple setup. I have placed greater than alert above the 1.04352 level, right, and less than alert here. If the market straight away starts to go up, then I'll possibly look for some long opportunities. The best scenario would be that if the market first goes down and then takes this upside level, then I will definitely be looking for long trades here, right? So long trades, we have a clear setup. For short side, we'll just have to wait and watch. Maybe it will give a small down leg, or maybe it will turn out to be a diagonal kind of a structure. 3 down, 3 up, 3 down, 3 up, 3 down, something like that. You get the point, right? So that's my take on Euro USD. Any comments on Euro USD on this particular chart? You can type them in the comment section. I'll take them. So Ganpati is saying, sir, is an ABC correction? What is the expected retracement level for wave B? Generally, you will look for in a B wave 61.8 retracement. And that's the standard thing you look for, Ganpati. Okay. And let's see, we have some people online here on YouTube and smaller audience on TradingView. What about you guys? Are you clear with what we have discussed so far? If yes, then just type in clear, yes, or +1 or something like that for a feedback. Same goes for YouTube. Let's check what the comment was. I have a question about when a wave is forming and when it is complete. In general, how do you confirm what a wave is confirmed and complete? For example, how do you know that the wave 3 is complete? It should be the longest wave in the rule. Sometimes you know the wave is complete. Sometimes you have an possibility that the wave is complete. For instance, just now as I discussed that the wave to the downside, this wave X, either it is complete here maybe, and it can go straight up, or maybe it's continuing. So sometimes we don't know, such as in this case, right? Sometimes we will know, and the cases we will know would be the cases where the internal counts are visible very clearly, right? So internal counts are visible very clearly means something like this. For instance, if you just take this point and this point, then the internal count is quite clear. I think I have already labeled it. But anyways, so here is the internal count. 1, 2, and then 3, and then 4, and then 5. So you can count the internals quite clearly. In those cases, you can say with a higher level of conviction that yes, maybe this is complete, right? But yeah, these are the two main things. If you can count the fractal internal fractals of the structure, then you have a higher conviction. When you can't, you just can't. That's how these things work. So I see there is no doubt on this particular chart, right? And I don't see any further questions as well. So in that case, we will just move on to the next chart, which will be, let me just quickly check what was the last chart we discussed. I mean, in the last webinar, so it was EURCAD. Let me see, EURCAD, right? Oil was the last chart we discussed, I think. So let's cover it later on. So in EURCAD, where is that? 4 hours. Yeah. So in EURCAD, the analysis was that we are in a possible diagonal, right? And the diagonal formation, for those of you not familiar with Elliott wave, is something like this. You have wave 1 up, a 2 down, and a 3 up, 4 down, and then 5 up, right? So I've drawn it sort of in the contracting nature, but what we have is an expanding one. So let's read out. So this is your rough structure for a diagonal. The upward movement is suggested by wave 1 up, 2 down, 3 up, 4 down, and 5 up. And then you can draw the trend lines, right? And the trend lines would be like something like this. So that's what you call a diagonal structure, right? And in this particular case, we are already sort of at the wave 4 here. So the fifth leg up is the one we are having over here. So we are almost at the end of the end, right? So my current setup here, let's just quickly go on to the smaller time frame, let's say 15 minutes. My current setup is there are two main setups here. First, you can wait for this 0 to B trend line. This is the 0 to B trend line of the wave 5 in the upward direction. Either you can wait for the break of this to the downside, alert less than exiting channel because it's a channel, or you can wait for this yellow trend line, but because I've just looked at it again, this yellow trend line will be outside the green channel. So yeah, first line of selling can be initiated once this green channel is broken. Second line once this yellow trend line is broken, right? But these are all aggressive trade setups. A confirmation or a stronger downside signal will come when this level is broken to the downside, the P-L setup, right? But in any case, this is what I'm following right now. This looks like a possible diagonal structure. I tried counting it other ways, but this is the best suited structure for now, and we'll wait for this green trend line to break, 0 to B trend line to break for to look out for possible sells. That's the setup on EURCAD, right? So I see decent number of people are online here. At this point, how about you guys just type in clear if you have understood EURCAD. If you have joined in late, then obviously you will not be able to do that. But we just discussed it for a minute. So how about you, Ganpati, almost gold? Are you guys still online? I would like to see the responses. It's a webinar, so responses or what do you call conversations should be going on. It's not a recording of a video. Thank you, Ganpati, for the comment here on YouTube. Now, moving ahead, let's quickly check what was the next. 1 second. Next one was EURJPY. Sorry, USDJPY, not EURJPY. Let's look at USDJPY here. I think in the last webinar, we were of the view that possibly the down leg was complete here, I think that was one of the views, right? Because it was also at this retracement level. I believe this is 50-60 retracement level. However, the market did not really form a clear upward move. Instead, it started to go down. So that's why I have redone the analysis here. Now, this updated analysis suggests that the current sideways price movement, this sideways price movement, is possibly a wave 4, which is either continuing sideways or it has already completed the sideways movement and will see a downward leg from here on. So that's our main take on USDJPY now. A little bit change of count and possibility of one more down leg remaining. Now the current setup, which I think this market might be following, is I think it might be following a complex count for wave 4, right? So complex basically means that it can go sideways for a little bit more than what the current level is. And we can quickly draw out our retracement levels as well. 23.6 and 38.2. And as you can see, 23.6 is already touched. So it is possible that this market might go to the 38.2 before it reverses. So in either case, USDJPY, we are looking for a possible sell-off in the short term, right? And this is the updated count from the last term, from the last time we discussed, right? And there are no confirmations for sell-off. So what that basically means is we will wait for this wave 4 price action to clarify itself, right? Basically that means going on a shorter time frames and checking it after once in a while, like let's say an hour or so, until it clarifies itself, and then take on some possible shorts. That's my take on USDJPY. I'll see support on 15 minutes. I'm not really going with that. So let's just keep our discussion strictly to Elliott Wave here. We are not going on what do you call standard supply and demand analysis. Everything like that is built inside Elliott Wave. So if you are clear on the discussions we made so far here, just type in clear and then we'll move ahead. So now moving ahead with the next chart, let's see which one this was. Which was crude oil. Okay. So let's see crude oil, and it did not go as we were thinking it should go. Where is crude oil anyways? There it is. I think that's the chart. Yeah. So in crude oil, our idea was simple. Our idea was that either the wave 2 or V is complete here, or maybe it will continue to the downside, and then we will enter some longs. And as a matter of fact, I was already long on crude oil, right? And I exited my longs when it broke this low. A little bit before it actually, but the idea was that if it breaks the low, then one should get out of the position. So with that out of the picture, I had booked the loss, and then after that, when I see this price action again, this does not look like a sort of wave 2 kind of price action, right? This is not the behavior I was expecting from a wave 2. So at this point, I don't think that we should be following this one up, right? 2 down and 3 up kind of count. That does not look very, what do you call, promising at this point in time. I would generally like to leave this kind of situation alone and see what the market is doing. But speaking from experience, if a long setup which looked good enough was not followed through, then that means there's a short setup incoming. So if this market tests this low, then possibly I'll add some shorts. So again, as I said, no reasoning required. The simple logic I'm using is that if a strong looking long setup is not working out, then that's possibly a good short setup, right? If you were to go into the counts and everything, then I recall that on the longer time frame, excuse me, this was a WXY. So if we were to get into the counts and everything, then this could be XZ, right? Or the X could possibly have completed somewhere here. I don't think so it has. So in that case, I would like to believe that something like this could complete the X and then Z. So as I said, a little bit unclear situation here. I'm not very interested in the longs until this market, if it takes out 87.383, then yes, I'll be possibly looking for some long opportunities here, right? Otherwise, I'll say that WXYZ maybe is continuing. So that's our updated view on crude oil. No new longs for now, right? Wait and watch possible short setups incoming, but no new longs. Again, if you guys are clear, type in clear. Or if you have a query, type in the query. So the next chart request do internal counts. You to sir in the next chart request you to do internal count. Okay, internal count. I would like to do internal counts on a chart which is something we would like to trade. Let's do it on next chart, whichever comes next. I think we are going to follow with the one more new chart. So I'll do the internal counts in the next one. And almost gold is saying on trading view. So are you saying that X is complete, then a possible short to Z? No, I'm saying X is possibly continuing, and then there's going to be a possible short for Z. And wave X has no obligation to remain in the price range, so it can go down first, then up, and then go down for Z. That's how wave X's generally are. Clear enough, I think. Okay. So I don't see any further comments on YouTube or TradingView. Anywho's, you can just type them in there if there is. In the meanwhile, let me just check which was the new chart which we had in mind to discuss. Canadian dollar against Japanese yen. 1 second. Let me see some things here. EURCAD is already discussed. EURJPY and interesting observations. Some interesting observations here. Okay, so let's discuss the chart of EURJPY. Right, Euro against Japanese yen. So I have actually 3-4 counts of it. As you can see, this is also a chart for EURJPY, this one and this one and this one. So I'm not going to go into all those details, right? It will take, I think, possibly 30-40 minutes or more, like an hour or 1.5 hours to just discuss that. So I'll just discuss the simplest, or what you call the most clear looking setup that I have in all those different possibilities, right? So the clearest looking setup I have on EURJPY is suggesting that possibly after 114.482 we have a possible ending diagonal in place, right? And for those of you not familiar with ending diagonals in Elliott Wave terminologies, an ending diagonal is a pattern which looks like this. Right? It comprises of a first wave up, a second down, a third up, fourth down, and a fifth up. And the important noteworthy point is that the first and the fourth, they overlap each other. Right? So that's the interesting or important point. So if we go with this, 1 up, 2 down, 3 up, 4 down, and the 5 up, then you will quickly notice that the first and the fourth are overlapping each other, right? They are overlapping. So with that in mind, we can then say that it's a possible diagonal, right? And then draw the trend lines here, right? And the setup for a diagonal is actually quite simple. If it breaks the trend line to the downside, then you look for selling opportunities, right? And the resistance is generally to the upside or the top of the trend line, which it has already touched, and it has already shown that it's a resistance because there's a spike here. Spike means that the long traders or the bulls, they tried to break above the trend line, but they were unsuccessful in their attempt. However, that does not itself initiate a short setup, because it can again go and test the trend line, right? And again. So it can continue going on. It will not confirm a short setup of any kind. Only thing that confirms or initiates a short setup is the break of this trend line, right? So, and again, the break of this trend line also means that you have to trade with a stop loss against the last high. It can break and go higher, then it is some other thing. Just because we are thinking it's an ending diagonal does not mean it's necessarily an ending diagonal. As a matter of fact, most complex structures can be looked at as a diagonal. That's where most traders go wrong. So anyways, it is still interesting in the sense that even if it's not what exactly we think, this setup will still hold us and possibly give us some downside movement enough for us to materialize some profits. So you get the point I'm making here is just be on the lookout for possible selling opportunities on EURJPY, right? And this is the structure we will follow for that. And yeah, I was asked that if I could do internal counts on something. Right. Is this a good chart for it? Let me see. So in our diagonal structure, we have the internals as an ABC up, ABC down, etc. So in this particular case, we will have to go with this as a ABC up, right? This will be your ABC down. This will again be your ABC up. Anyways, as a matter of fact, I'll just do it without this thing. This will be your 1, this will be your 2, this will be your 3, this will be your 4, and this will be your 5th. So the idea was that we have to check the internal structure. So I think this is a 1, 2, 3, 4, 5. This is a diagonal structure here. Leading diagonal, right? Followed by W, X, Y. So the W is because this is an A up, B down, and C up. So that's a W, right? And X here, A, B, and C for the X. Y here, A, B, C, or you can also count this as an ABC flat. You can say that ABC up for an A, ABC down for a B, and this is your diagonal again as an ending diagonal. How come it's an ending diagonal? We have a 1 here, 2 here, 3 here, 4 here, and 5 here. So there's an overlap between 2 and 4, so that makes it a diagonal structure, right? So that makes your C complete. So that basically makes the C complete, making the flat structure complete, and hence your bigger degree A is complete here, bigger degree B is complete here, and bigger degree C follows down, completing the 2 here, right? ABC for 2. Am I making sense here? Are you guys able to follow along whatever I'm talking, or am I too fast? I'll just wait for a few seconds because I know there's a delay in the. Okay, clear. Thank you, Ganpati, for the response. And why is it there is no response on trading views? The audience, they are not interested in the webinar because I see some people are online, but the responses are like just not that good. Okay, anyways, leaving that aside, wave 3 again, we will have a 3-wave structure. So that's your A, that's your B, that's your C, and let's take a look at wave 4. Right, let's take a look at that. So that's your wave 3, that's your wave 4. So this is again an A down for a possible flat structure, A, B, C for a B, and then that's a zigzag, by the way, sorry, not a flat. A down, B, and C, and the B is itself a corrective structure as it should be. So the B is 3 up, 3 down, and 1, 2, 3, 4, 5 up. So the B is a flat in itself. You can even count it as a, let me see which one is higher, dot A, dot B, dot C for the internal, and then the B is complete, and then C down is there. So on and so forth, right? You can just count them or keep continue counting like this. So that's our analysis on what do you call euro against the Japanese yen. And yeah, in the short term time frame, let's say on the 4 hour, there might be a triangle under formation which can lead to, after the completion, one more leg up. So I'll be wary of that. I have a trade setup already placed here. First is we have a 3 waves up for a W, sideways is what I'm expecting as a triangle, and then another leg up. So very simple setup, long triggers or alerts above the high of 147.893. That's our take on that. Yes, Ganpati, you are right. That is example of no, actually that's not an expanded flat. If you're talking about this, this will be what you will call a running flat structure. Expanded would be the case if it were able to take out the high here. So if this wave C could have taken out this high, right, then you could have said it's an expanded. Yeah, yep. You're throwing a lot of terms around here. Anyways, that's the second name for that running. That's correct. That's about our discussion for euro against the Japanese yen. I think nothing to add on that. I'll wait for a few seconds if you guys have any queries. And if not, as I say so many times in this webinar, just type in clear. It does not take much time out of your lives, is it? Or does it? Sorry, correcting myself there. Okay, next chart would be, we have to look at gold next. Interesting chart on gold. Okay, so gold, last time when we were discussing, the idea was that it had some upside moment remaining. I recall that very clearly because I had actually even posted it, was that clear. So yeah, that was the post on gold. So idea was that there is at least this leg up remaining for this double bracket 3 and this leg up remaining for this double bracketed 5. Let's see how that played out. So we have the double bracketed 3 wave up already complete. The 4 down is still continuing, and then the 5th up is what we expect to be remaining, right? So as far as my understanding of this chart is concerned, it has played out so far quite well so far, right? Now let's look at the current scenario. So in the current scenario, as we said, the wave 4 might be continuing, but it's falling still. So that means the wave 4 is still having some downside remaining. Generally, what you like to do is check the 23 and 38 levels. It is already past the 23, so next we can expect it to go to 38.2 level, right? If it goes much beyond the 38.2 level, then something else is happening here, right? And we should not consider this setup as valid anymore, right? So the simple idea is, if it, let's say, closes below this level, 1340, if it goes below this level and takes sort of resistance over here, then we will not consider this setup anymore, or the long setup should not be considered anymore, right? And the simple solution to not bother with any of this is just put an alert somewhere around 1767. If the alert to the upside is taken out 1767 without this market giving a strong blow off to the downside or strong fall to the downside, then we will be still interested in longs. Right, so gold, if I were to readjust this stuff, okay, so that's our take on gold. We expect that the market can reverse around 1740. We expect this around 1740. But if it does not do that, then we get out of this market, or sorry, not get out. Then we do not initiate any further longs on this market. We just wait for a bit and see what's going on. So as far as the 1740 is not strongly taken out to the downside, this setup remains valid. Although I am a bit doubtful as to the relationship of this wave 4, right? It is sort of going and consuming, but anyways, it's wave 4, so they are sort of what you call known to do confusing stuff like this. Anyways, that's our setup of gold. We wait for possible longs, maybe a reversal around 1740 or maybe a little bit above it. If not a reversal around 1740, then or above it, then we relegate the idea of longs at once. That's my quick take over here. I don't think it's very complex, but still type in clear, guys. I don't think almost gold is with us. I have not seen him comment for a while. But now we have discussed gold, maybe he will come back just to check on what we said on gold. Just kidding. Anyways, guys, I'll just now move on to the last charts. S&P and Nifty. Is Nifty's and S&P's chart. Yeah, so S&P literally has no change. As I said last time, we were expecting that this market can move within this sideways movement and maybe even go above it at once before it goes for another low. That was our count on S&P: A down, B up, C down. Not necessarily B up, but B possibly sideways or up. So there is no clear conviction on that, right? So yes, Ganpati, next chart will be next. So there is no update on this. We just still expect either it to go sideways or up within this range, or maybe even go higher than this range at once and then fall. Same on S&P. It's basically an options trading market right now. A lot of spread opportunities we can have here. KKYY. Yes, we can have a quick look at BTC as well. But I will have to say the participation in these webinars is very, very low. Although this is a prime time before the US market open, we started. The trading view is let down here, I think. Maybe I'll stream a few more days and see. But this was not the participation I was expecting. The YouTube audience itself is far more participating here compared to a platform specifically dedicated to traders like TradingView. Anyways, let's move on to the chart of Nifty. Again, not much to update here. The idea is very simple. The wave 4 is looking like it's still possibly continuing, right? As long as the market remains below the level of 18427.70 or 18441.70. So below this level, we will have to go with the assumption that wave 4 might still be continuing, and only above this level can we say that the wave 4 is complete. So once this level is taken out, we will know that the wave 5 is in play. And keep in mind, by taken out, we mean that at least one full candle, which is having what you call at least the average movement compared to the past 30-40 period movements, right? So once we have a clear movement above this level, then we can say that the wave 5 is in play. Until it is not doing that, we are not really caring much for it, right? Maybe it will form some sort of clear correction here, then maybe we'll look for longs. Unless it does that, we can just let it be and do the simple enough thing here. So not much to add here. Yeah, but anyways, stock wise, there must be some very nice long setups forming. But that's not the subject of this discussion. And yeah, guys, one thing I'm planning to start a series for Indian market specifically, which I'm planning to do at 4 p.m. IST, right? What do you guys think? Those of you who are interested in NSE stocks and Nifty and Bank Nifty. Is 4 p.m. IST a good time for you, or should they be done in the morning session before the market opens? Those few of you, I think, on YouTube, I believe who are interested in Nifty should be interested in that as well. What about you, Ganpati? I think you are trading the NSE stocks as well if you are in Nifty. I'll take a sip of water. Give me a second. Okay. I probably will start on those webinars from Monday. If you are in the subscribed emailing list, that's good. If you are not, then let me show you how to do it, because I will release the details for the first webinars on via the email subscription list. Let me quickly show you how to do the subscription thing. So if you go to the website iftias.com, here is the email subscription on the top. We will have to check if it's all days or weekly. At least it will be 2 days in the week, 2 to 3 days. We could do it daily, but the point is that on daily, sometimes there is no what you call point of much discussion. As you just saw, even we discussed Nifty 4 days back, and till this day there is not what you call much point in discussing it again. I just took 3-4 seconds and explained it. So we will see as we go along, right? But if you guys who are watching later as a recording are not subscribed, you can subscribe to the emailing list here. This is what I use to make major announcements. And second thing I use these days is Twitter handle, or you can just click here as well. And the reason I'm using Twitter is because sometimes emails are opened after 1 day, after 2 days. So if the update is time sensitive, just like the announcement for this webinar, as you can see over here, then it's best you follow me on Twitter, 50 underscore EYES, 50 underscore EYES, as I've just highlighted here, right? So that's how things are, right? That's how I operate. So follow me on both email as well as Twitter, right? And before I move ahead, while we are discussing social media, definitely share it on your social media, Facebook, Twitter, or Insta, or whatever you guys use. Or if you have some specific Telegram or WhatsApp groups, share the webinar links after they are complete. Because the general idea is that as the what do you call number of subscribers go, not subscribers, as the number of what do you call participants grow higher, I am more motivated to do these webinars. But instead, in this case, we are seeing the participation is not really that much high. Even on trading, at least on TradingView, on YouTube it is high. So it is up to you guys to share the link so that we get more following. And once there is more following, I can just do more. So there's some bot who is promoting some stuff. I'll have to block this guy on Twitter. Twitter is filled with these bots. Once they see hashtag forex in anything or hashtag trading in anything, so they just automatically post these marketing messages. Same goes for YouTube. That's why my comments are always blocked on YouTube. Anyways, that was my message. If you guys have come this far in the webinar, definitely share it with your social medias as much as you can. 2 places, 3 places, 5 places. Whatever the level of exposure we can get, the better. So we were discussing Nifty. As I said, Nifty did not, we did not had much to discuss other than the fact that 18,471 something or 436 something. I mean, you can just check the last was the important level. And what is the update? Are you guys still online? Are you guys still with me? At this point, I'll just wait and see if you guys are still listening. Trading view is almost dead. There was only just one guy commenting and he's also gone. At this point, I might just stream on YouTube. Okay, so Ganpati is asking the rise of Nifty from 16,146. Is it impulse or correction? Ganpati, I think we discussed it in the last webinar. And so the last webinar, yeah, but if you guys are there and if you are not commenting while I'm asking multiple things, then that's no good either, man. So that sounds almost like I'm recording a video. Anyways, I cannot force people to keep commenting here. So I'll just ask Ganpati's, answer Ganpati's question. The answer was that we have already discussed it and I am considering both the possibilities, right? I'm considering the possibility that it might be an impulse as well as that it might be a correction. But at this point in time, it currently looks like we are possibly in an impulse because as you can see from this, what was the level you suggested? 16,746, right? Yeah. So from the 16,7 whatever level, we are suggesting that we are thinking that, not suggesting that, we are thinking that this 5 is up remaining. So that itself makes it an impulsive structure. So at this point, the impulsive count is definitely what you call leading here, right? We are not thinking of the bearishness, right? We are thinking the bullishness should continue. That's our take right now, right? And a takeout of the 18,430 something level would be another leg in the right direction for that. So that was my take on Nifty, and last chart has been requested, BTC. Let me quickly check BTC. Before I move to BTC, those of you who are following the NSE Stocks, if you have a what do you call social circle like a Telegram group or something wherein you can share, definitely drop me an email or just email right after this. Maybe Ganpati, if you have some groups, I like to chat with you and see what kind of audience we can generate on that. Because if I'm to do these webinars, I better have a good audience, at least 100 or more people. So I'm thinking of planning a strategy. So if any of you, my dear subscribers and viewers, if you have some contacts regarding that and you can help me plan out a strategy, then definitely drop me an email after this and I'll just get in touch with you on call or something like that and we'll see what can be done with that. So let's move on to the chart of BTC. Where is that? And I seem to have gotten a question here as well. I would like to ask a question, but I just started learning Elliott Wave theory and I don't want to sound stupid. Okay. So you can still ask it. Maybe ask it if you see it right on the charts, that would be better. Like if you are just asking a complete theory question, then sometimes I probably won't be able to interpret your doubt. But if you ask it like, if I discussed, let's say a diagonal and you have a question on a diagonal, then I can probably better address it. There are no stupid questions when you are learning. And yeah, one advice, because you were talking about some book, there's a lot of nonsense jibber jabber on the internet. I believe the book you were recommending comes in that alignment. If you are going to learn, just learn Elliott Wave. Okay, I don't want to sound sarcastic or someone trying to promote his stuff. I'm not even telling you to buy my book or courses. But if you are going to learn Elliott Wave, just learn Elliott Wave. Okay, I have worked with a lot of people. I have worked with hedge funds. I have worked with prop traders. Nobody uses that stuff which you were typing there. It is mostly theoretical nonsense. and the few traders who I have worked with personally in classes who have gone through that book, they just couldn't make any sense of it, and they were telling to me that Nirav, there were so many rules. If you start following them, you won't even complete one chart in a day. Okay, so that's my honest opinion there. If you still want to follow it, who knows, and who cares. So next, Ganpati Singh, I have purchased your book. Good read though. Thank you, Ganpati, for the feedback on YouTube. But I will appreciate it 100 times more if you can go on Amazon and leave a review there, right? Because what Amazon does is that if the book does not keep getting new reviews, it moves it down the what do you call ranking. So if you were to go and type in "Think with the Markets" by Nirav Yadav, it will, let's say if it's coming at second position, but if there are no new reviews in a month or so, they will move it to 5th, 10th, 20th position. You get my point? And then they will make it invisible. So my point is, if you have actually read it, then, and if you like it as you are saying, so definitely please just leave a detailed review, not just a one liner, a big review here. So that will help me keep the book visible on Amazon. He's saying, Ganpati is saying, but need to read more time again and again. Yes, that's true. You'll need to read the book multiple times. But it's a very small read still, 3 or something, not bigger than that. Anyways, that was my take on how Amazon ranking works. I have not read it anywhere. That's just my personal observation that they move the ranking down from what I've seen so far. So last thing we were to discuss BDC. Getting back to our main discussion, ABC, what am I even doing here? ABC, W, X, Y, X, Z, it's the B continuation. Okay, so I'll just narrow it down for you guys. What have I done here? I've done it as ABC for A up and B down and C up for the B. Okay, so it's a complex count in play. I'll try to explain it as clearly as I can. So let's just say, let me just quickly start. Okay. Let's just say this is the A down, actually not A. Let's say this is a W down, right? This complex understanding is suggesting that X might still be continuing, right? If X is continuing, then this is the A of the X. This is the B of the X, and this will be, there will be, or there should be a C of the X, right? So this is the first count I have. I think I have 3-4 counts on BDC, but let's discuss this one because it is an interesting one. So this is the W down, this is the A up, this is the B down, this is the C up. Now, as we know, wave Bs can be complex in themselves, right? So that's the take over here. I've counted this as a dot W, let's say, a dot X, a dot Y. Let me see if the dot Y is complete. No, dot Y is continuing. It's what I am suggesting here. So we have 1, 2, 3, 4, 5 for A of the dot Y, and then B of the dot Y is either here. Actually not. No, I think the B of the dot Y may be here. A, B, C, no, it possibly is still continuing. C of the dot Y. Okay, now that I've done my jibber jabber, this is the outlook which I think is happening. So I think first of all, this is a wave B going to the downside. Let's make it circled for the sake of clarity. Right. Now the second thing which I think is that the circled wave B has a WXY formation, right? WXY formation means this is the W here, the X here, and the Y will have 3 waves in itself, which are called an A and a B and a C. So in that count, we have the A here, 1, 2, 3, 4, 5 for an A. Then the B looks like it is continuing, right? I will not go too much into detail because the other point which I'm going to make is the more important point. So once this B is complete, whichever count it's forming a triangle, it's forming a flat, whatever. Once it is complete, then we will see a leg down, right? Now the thing is, for the measurement of the leg down, I am assuming that it will stop somewhere around 15,294,210. The thing is that it's on a log chart, so every measurement is wide. So around 15,294 to 15,254. let's say 15 to 50. So near about 15 to 50 level, I am expecting that this market might give a reversal. So again, 15 to 50 does not exactly mean 15 to 50. What can happen is a small spike here, right? Small spike here, which can even take you to 14 to 57 and then up. Right, so around this level, right, around this level, around 15 to 50, let's say 50 points up, 50 points lower, or let's say 100 points up, 100 points lower, right, to give it a little bit of space. Around this point, I am expecting that this market should give a jump up, right? So that's my expectancy. On the other hand, if this market does not give any sort of, or does not take any sort of support near this zone, around this 15 to 50, whatever, 100 point up, 100 point down zone, and it forms, let's say, a red bar here, right? Then that would mean that we are following the second count. The second count I'll just discuss after this. First of all, just guys, let me know if you are understood this count. This count is suggesting that around 15 to 50 something, this wave B will complete, and then we can see a C up, right? The C up can go till wherever it wants to, but minimum expectation, we expect the C up to, what is happening? Yeah, minimum expectation, we expect the C up to go till around 31,000 level. Okay, so that's our first count on BTC. I'm waiting for a response. Clear, then type in clear. Only once I see some clears, then I'll move on to the next count. Okay, thank you, Almost Gold, and thank you, KY. So what the next count is, let me see if I have it on the next chart. It will make things easier for me. A down, B up, and what do I have is 1, 2, 3, 4, 5 for first leg, correction up, third leg, correction up, next leg down. Yes. The next count is that this is the A, this is the B, this is a 1, 2, 3, 4, 5. Let me see, 1, 2, 3. How I have counted is, it's very complex. So I'll just quickly see 1, 2, 3, 4, 5. 1 second, guys. 1 second. Should have been more clear here. That's the next leg. I did not go there. Now this is a low conviction count. Now I'm having another look at it. This C leg down does not look like a C leg down. And if we try to count that as a triangle here, this is a low conviction count because it is a sort of forced count. There is no clear triangle here. I mean, there is a clear triangle, but it does not look like the kind of count which I would like to take as a primary. But yeah, this is our second take here. I'll redo the counts in the second chart. But anyways, if the A leg down is here and the B leg is here, then this is your 1, 2, 3, 4, 5 for first leg down. And this is your second leg. And this is super bearish. I don't think I need to explain wave threes are the longest, fastest, yada yada, yeah. You get my point, right? So this is a low conviction count, as I just repeated myself third time here, maybe, or fourth. Okay, but this is not something I can relegate. because it does fit in quite well. Okay, it cannot be relegated at this point in time. I don't think there is much to explain here. You get the point. If there is a wave 3 here, I can do some measurements, but at that point it will be considered that the bubble has been burst, I think. Let's say the 2 completes here or somewhere here. Let's say somewhere here. $61.8 is 4,197, right? And you get the point, right? It's going into negatives, I believe. No point discussing that count. So that's our second take, the extremely bearish or ultra bearish count. The hell, 1 second. So ultra bearish count, A down, B up, and first leg down, second leg up, third leg is a strong move down, right? Sorry, the B was here as a triangle. There is one variation I see. You can say that maybe it's forming a diagonal, but yeah, it is forming a possible diagonal. That can be taken as a ABC move with the B triangle here, right? If it's forming a diagonal, then the measurements won't help us much. The A equal to C is already done. No, it's not done. So if we take that count, the A equal to C makes the market to come to 6,495 level. Again, not much helpful. So anyways, we'll see as things go along. I don't want to discuss too much in this BTC market. It's not my favorite market. Given that there are so many things we can trade, why bother with it? Let it play out itself. Only important level which I suggested, which is very near. Let's look out for it if you are interested in it. Otherwise, ultra bearish count is there and the diagonal counts may become clear in time. Anyways, that was my take on BTC. Two different scenarios I discussed. If you have any doubts on what I've discussed, type it in the comment section. Right? If you have no doubts, again, type in clear. Right? Also, this is the end of the webinar. So whatever charts we have discussed, you can type in a doubt for any of those charts as well. It's all right here. I can just go back and check quickly. And if you don't have any further doubts, why the wave be not at 2021 November? Why the wave be not at 2021 KY? Because if you start to try and count the market movement below that, it does not count as any Elliott wave pattern whatsoever, right? A wave C is supposed to be a diagonal or a motive wave's second structure or the first structure, which is an impulse. It could not be counted as a diagonal. It could not be counted as an impulse if you take the B over here. So in the second count, not in the first count. So in the second count, that's why. Actually, in this count also, I'm not taking the B here. I'm taking the B is continuing. So just corrected it. So that's why I'm not taking the B over here. So with that, I think I have answered your question, KY. If you are still unclear, you can just type in again your doubts. I don't mind taking any doubts at this point. And before we end this webinar, let me quickly run you through my services. 50 hours market analysis is the one stop for all the work that I produce. All my latest posts are showed in the bottom, but I think given the fact that I'll be starting a lot of live streams almost every second day or almost every day, maybe I will not update everything as an article, right? So that's why I have been saying to you guys, follow me on, where is that social media link? Yeah, there is it. So follow me on Twitter, So Twitter, I will post everything that I produce, every link, every webinar, etc. will be on Twitter. Email is definitely important because all the major updates I do are via email. I am on LinkedIn, right, as well, and YouTube. So email, Twitter, and YouTube. If you just want to stay at the bare minimum, email, Twitter, and YouTube. Definitely do that. One more thing, when I do a webinar, which is broadcasted on TradingView alongside with YouTube, then the webinar is shown in the live section. Okay, keep that in mind. If you go to the videos section, it will not show you the webinar. Only in the live section will you be able to see the webinar. Second thing I have noticed is that once a webinar is broadcasted, it takes about 12 to 15 hours for YouTube to process it. So if you want to watch the recording of the webinar right away, then TradingView is a better option. So that way you will have to go to TradingView and watch it. There it will not have a problem with the loading screen or anything. So TradingView is better if you want to watch the webinar right afterwards. Okay. So I'm saying a lot of things. Basically, that just means, long story short, follow me on as many social media platforms as possible. That's the website. Yeah, courses. I have Elliott Wave course. I have a personalized training program called Training Program LT, and also Ganpati, I have the course, a video recording of the webinar we did for the book, specifically for the book. This is here, right? You can email me if you're looking for more details on this one. I don't think I have provided, but yeah, it is a webinar done on the book, so that's there. So these are the various things, personal classes, video course, etc. that I do, right? And the public webinars, etc. I keep posting here, as on YouTube, as and on Twitter. That's up for all for my, what do you call, marketing part. And let's just quickly take on the final comments. There is a comment, clear sir, next time when you do account, please share the account on a high time frame. Like Pantheon, please give an idea how the future looks like. So Ganpati, that's not really very practical, because if I look on a monthly, then to go down to a shorter time frame, let's say like monthly to daily to monthly to weekly to daily, it can take 30-40 minutes to just do one chart. At that point, it becomes something you should look in a paid service, because people on YouTube and TradingView, they don't come here to look for a long study of a chart, right? You're getting my point. People here just come to look for a quick analysis. So maybe you might be interested in it, but 99% of the audience doesn't care at all. Getting my point? So I will not be doing that very often, unless, of course, if that is required, I'll do it. And that's the reason I just given you. So that about clears, or not clears, completes this webinar. And I'll see you guys in the next one. And before I leave, again, I'm requesting, share this webinar in all your groups, all your social media, and email it to the people who you know are trading and will benefit from it. Okay. So that's it from me. I hope you share it, and I hope you show up in the next webinar, because your participation is required to continue doing these. Thank you guys for being here, and I'll see you next time.